Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. First Solar reported earnings this week, and the market wasn't really happy with what they saw. Results missed analyst estimates, but underneath there wasn't really a lot to be surprised about. So I want to dig through the numbers, the trends that we're seeing from First Solar, why the stock is down, and what I think about the company long term. My name's Travis Hoyam. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content and turn on those notifications so you know when a new video comes out. And I want to just start with the press release. Here's the basic results from First Solar. Net sales, $548 million. Net income of 40 cents per share. Net cash on the balance sheet was $2 billion. None of these should be huge surprises for the company. The other thing that is worth highlighting right here is that 2023 guidance remained unchanged. So for the year, management expects about $3.5 billion in revenue, gross margin to be $1.2 to $1.3 billion. So in that 30% range, volume sold of 12 gigawatts. Let's keep that in mind because I'm going to talk a little bit about the fluctuations there in unit sales and then earnings per share of $7 to $8. If we go to the presentation, this is where management really walks through what's going on in the quarter. This is one that's been changing pretty significantly for First Solar. This is the backlog of expected modules sold at the end of last year, 61.4 gigawatts. Right now, 71.6 gigawatts. First Solar is sold out for production through the end of 2026. So this is a company that's got a lot of consistency in its business, knows where a lot of that future revenue is coming from. Technology is improving over time. That shouldn't be surprising either. And then here's that guidance again. Again, unchanged. But let's look at the key metrics because I think this sort of explains what's going on with First Solar this quarter and the volatility that we see quarter to quarter in revenue and earnings. So right here on the net sales line, which is the top line, you can see that a year ago, revenue was $367 million. That went all the way up to $1 billion last quarter and now down to $548 million. There's a few things that are going on there. One, there are a lot of big projects that when solar panels are sold in, you don't make revenue for each solar panel that arrives on the site. You make revenue when the project lights up those solar panels or when it's commissioned. So it can be really lumpy depending on when projects are being completed, when they're under construction. Same thing for projects that First Solar was building itself. For a long time, that was a huge piece of the company's business. So you would have huge fluctuations in revenue and earnings depending on when projects were built and sold. We see a little bit of this down here at the bottom with megawatts produced and megawatts sold. Over time, those two numbers will match up to each other. But you can see that a year ago, there was a lot more produced than sold. Then you go to last quarter, fourth quarter of 2022, a lot more megawatts sold than produced. This quarter, we go back again to producing about 600 megawatts more than were actually sold in the quarter. The big thing is that production is expanding. First Solar is building new production plants, expanding existing plants in Ohio. This is a company that's growing what it's making. It's increasing revenue over time. But that doesn't mean that that number is going to go up in a straight line. That's exactly what we saw this quarter. So shares of First Solar are down about 10% as I'm recording this on Friday, but they're up 150% in the past year. That's where I think we get a mismatch between investors that are looking for short-term results and investors that are looking at a long-term investment. First Solar is not a company that's going to have consistent results, going to have consistent growth. I don't even think management could guess what next quarter or even the quarter after that is going to look like specifically. That's why they give full year guidance, not quarterly guidance. As a result, if you're an investor in a company like First Solar, you have to take that 5 to 10 year view, not a view on what the next quarter is going to look like because there's so much volatility in the business. What I think we should be encouraged by is the fact that guidance for the full year remained constant, despite the fact that this was maybe a disappointing quarter to a lot of investors. Management said that they still expect this to be a really great year. That's $7 to $8 in earnings is really great considering the fact that production is going to about triple over the next couple of years. And those new plants should be relatively high margin, just like the company's plans for this year. So I still like the future for First Solar, but this is definitely a long-term game and not a short-term one just because of the volatility. But if once you understand how this business works, how the numbers fluctuate quarter to quarter, I think it's easier to understand what's going on this quarter and how to think about the business long term. First Solar is still looking really well positioned to compete and gain market share in the solar industry. And we see that by selling out products for the next almost 3 years. So really good signs for First Solar, despite the fact that the stock is coming down today. My only hesitation is that this is a very expensive company, but sometimes you do have to pay up for quality, especially in a manufacturing business like this. So nothing to be alarmed about for First Solar investors. That's my takeaway. But what did you think? Leave your comments in the comments section below. Don't forget to subscribe to Rive Investing. Thanks for watching, everybody. I'll see you here next time.